So in 2014, lots to do. The market's not going to get any less competitive, so we need to build on strong foundations. We think those foundations are around focusing on the customer and providing great customer service. Within the heading of customer, we would have our trading partners, so our brokers and our affinity partners. So maintaining close relationships with those trading partners and being responsive to their needs is something that's continually important for us. Linked to that, the whole strategic rationale of buying Groupamar was around keeping a broader range of products and services available to brokers in particular. We've got some internal work to do around computer systems and the like, but it's really important to us that we maintain the breadth of product range and services that we now have within Ageas. And I'm very pleased to report that at the moment we have a very healthy pipeline of business opportunities, and a good part of that pipeline is in the non-standard space. That's not really the traditional area that Ageas has played in. So we are seeing the benefits of that acquisition come through. More generally, we will maintain our pricing discipline. We're watching with interest where motor rates go during the course of this year. There's some talk of them increasing. We'll see if that happens. As I say, we're monitoring the situation closely. Within household, weather would appear to feature every year, so we need to price in weather events but maintain competitive rates in household. We're very keen to do that. And over the last year or two, we've done some work on our commercial insurance portfolio to bring the combined operating ratio down. That's now in a position where we're quite happy with that account, and we'd look to grow and develop, particularly in the SME sector. More widely, within our retail businesses, we have some challenges within our retail businesses. We need to focus on the brands there, on the customer proposition there, and make sure that the cost base is fit for purpose going forward. So plenty to do in 2014. Well, I think for the industry in 2014, the amount of external scrutiny is not going to get any less. So we've got the PRA and the FCA. They've definitely got their feet under their respective tables now, and so they are engaging with the industry on a very regular basis. We've got the Competition Commission review running in motor, but it's wider than the pure regulatory front. We've got the media and we've got politicians taking a very active interest. So all of this means that the reputation of the industry is under scrutiny. And to be honest, there are areas where the industry can probably up its game. So I think that's an ongoing dialogue during the course of this year. We will be watching rates. There's currently a situation where premium rates in both motor and home are falling. I think there's real questions as to whether that's sustainable in motor, so we'll be monitoring that situation very closely. And more widely, we're nothing without our customers, and customers will decide how they want to interact with their insurance provider. So whether it's through mobile, or whether it's through social media, or whether it's through some other new technology development, we need to keep our eye on all of those things.